So welcome everybody to our webinar today, which is on Going Concern. And I'm delighted to invite Susan Robinson, who is Charity Partner. A much longer title than that, but the shortened title is Charity Partner at Kreston Reeves. So welcome, Susan, and thanks very much for joining us this morning. So we're going to start with just wanted to show you a little bit of a state of the nation on the survey that Kent Community Foundation has just carried out. And for anyone who doesn't know me, my name is Josephine McCartney and I'm Chief Executive of Kent Community Foundation. So Amy, can I ask you to share the screen, please? So as you know, we're hosting today and we're Kent Community Foundation. Next slide, Amy. So we've carried out 3 surveys since the beginning of lockdown, and at the beginning it was a pretty bleak picture, and then when, if you can go back to that slide, thanks. At the beginning it was a pretty bleak picture, really for a lot of the sector. But actually, as time has passed, people have been starting to feel a bit more optimistic about the future. So the results, which is just the kind of top line that I'm going to share with you this morning, it really kind of shows that optimism, but also it's just a kind of a moment in time. So it's how you are feeling right now. That might not be the case in 6 months' time, when a lot of the emergency and the hangover money that's been coming from central government comes to an end, and hence the reason why we asked Susan to come and do this presentation today and answer your questions, because I think now is the right time to be thinking about how you ensure the financial robustness of your organisations going forward. So next slide, Amy. So just so you're aware, we had 184 respondents, which is probably about 10% of the sector that we sent the survey out to. Back again, sorry, organisations ranging from 10,000 to over 10 million in terms of annual income. So a really wide range of organisations that tend to respond to our surveys. So if you did respond to the survey, then thank you very much. We appreciate that. And then also a good spread across the district. So it gives us a real sense of the kind of wider sector. And yes, it's only 184 respondents, but they probably reflect a lot of the sector. And then if you did do the survey, then we did have a prize drawn. We will be announcing the winner of that next week. So so watch this space if you did actually complete the survey. Next slide, Amy, please. So just the top line figures, and there's 5 stats for you to kind of be aware of. So as I was saying before, confidence of being in operation in the future is up by 8%, which is 76% of respondents saying that they are 100% confident they'll still be in operation in March 2022, and that was compared to 68% in November. So I think you know, National Lottery have made quite a few announcements recently, and that probably affects that. There is more money coming through into the sector at the moment. How long that will last, we don't know. 74% of the sector say there has been a rise in demand for their services, and that's up from 59% since November. And I think you will probably all be in that 74%, because the majority of the sector has seen a significant rise in demand for their services. And next slide, Amy. So a quarter of those who said it had increased in terms of their services said that they hadn't been able to meet that demand. And we know that too. So that's, you know, this is just provides us with the evidence from all the anecdotal conversations that we have with the sector. So we know you don't have the resources to meet the demand. And that's the message we then give on your behalf to anyone else who will listen, really. 40% have had to recruit to meet the increased demand. And I suspect that the 40% that are recruiting have been receiving some of the emergency money, because otherwise you wouldn't have the budget to recruit. And then 40% of organisations have pulled together during the pandemic, saying that they had collaborated with other third-party organisations more than they usually would. And that's definitely a positive outcome from the pandemic. Sometimes these collaborations are born out of need. And I think that's exactly what's happened now. Next slide, Amy. And so this is the final slide, I think. So 68% said they had moved part or all of their services online, and only 60% of those organisations intend to continue to deliver those services online. That's quite high. That's one of the outcomes, I think, that surprised me, of the amount of services that have will continue, at least for the rest of this financial year, to operate the services online. 43% said they currently or will struggle to recruit volunteers in the coming months, and I'm sure you're all feeling that as well. I'm sure that's quite common, and I know it's common from the conversations we have. And then the final one, again, concerns me as well, but more than a quarter, 27%, said that they would not be running fundraising events this year. And we have all the stats and detail that sits behind that, and we'll be publishing the full survey next week. But I thought it might be helpful in context of what Susan is now about to present, to kind of let you know that that's how the sector are feeling right now. So thanks, Amy. I think that was my last slide. So I'm now going to introduce you and hand you over to Susan, who will tell you more about her role in Kreston Reeves, and then go on to her presentation. So over to you, Susan. And Amy, can you share your screen again, please?
Sorry, everyone, I'm just going to check that the slides don't skip across again like it did a moment ago.
Okay.
Should I do?
While Amy's getting up the slides, I'll say introduce myself. Thank you for attending today. It's a pleasure to present to you. I'm Susan Robinson. I'm head of the charities not-for-profit sector in Kreston Reeves, but I'm also trustee of 3 charities in my own right. So as with many of you, I've been through some traumas over the last 12 months where funding and continuing has been of some concern. We're all aware that the UK economy is currently, if you'd like to go on to the next slide, Amy, is currently going through one of its toughest times as a result of the pandemic, and charities have been particularly hard hit as a result of the crisis, with reduced income alongside increased demand and restrictions on the ability to deliver to your beneficiaries. Although additional funding has been received by the sector in the last 12 months, there are big concerns with what happens next. I hope this presentation will give you some understanding of the issues in respect of going concern and help you face the months ahead successfully. Next slide, please. I'm going to do this presentation probably in 2 parts. I'm going to, first part, look at setting the scene, the trustees' liability, cash flows and budgets going concern, and then move on to strategic work, particularly when you're in a crisis, which I hope you aren't, but it's making plans. Any crisis can be helped by future planning, thinking about things and almost having that crisis plan in the drawer. So before the pandemic, funding was within the sector was always an issue. Income timing was variable, project start dates could get delayed. And outside of the sector, there's been a number of high profile collapses, for example, Carillion, and going concern was moving up the agenda within the financial sector. Then came 2020. Some of those businesses previously hanging on finally went, such as Debenhams, and the same has unfortunately applied in our sector. May last year was doom and gloom in the sector. Would the charity survive until the end of the year? I know I went through quite some traumatic situations around about that time. But funding did become available in the form of furloughs, emergency grants from foundations and local government. The worry now is these grants are ceasing. What is going to happen later this year going into 2022? It's nice to see that the positivity within the KCF's poll actually said they thought they would be in business still in 2022. And also that's has shown that demand has increased, but income is falling, and the fundraising that we really need to be doing, we still can't get ahead of. Next slide. I just want to summarise what is insolvency, because people don't always get that. Insolvency is the inability to pay debts as they fall due. So it's not having no back cash, it's you can't pay those debts. And the trustees have a responsibility to safeguard the charity assets and also ensuring sustainability. So if we move on to the next slide, we're going to talk about the liabilities of trustees and directors. The obligations and implications of insolvency depend in part on the legal status of your organisation. Where the not-for-profit organisation is an incorporated organisation, that's limited by guarantee, a community interest company, or a CIO, community charitable incorporated organisation, there's some protection for trustees, but this does not remove all the liability. Care must be taken to ensure there is no what is called wrongful trading. That's when you carry on doing your business when you know there's no prospect of being able to pay your suppliers. This is why you have to be on top of your finances. You don't want to suddenly have a surprise expense, which you weren't expecting, that actually pushes you into that position of insolvency. It is important the position is reviewed regularly at board meetings, and there is a clear budget in place which is approved by all the board and is being followed. If you reach a position where insolvency could be possible, then you must be extremely careful about making payments. You should spread any cash you've got fairly between the creditors, and you should not have preferential treatment. So you shouldn't pay off somebody at the expense of someone else, because you could find yourselves in liability problems then. With unincorporated organisations, trustees can be personally liable for the debt. So again, you need to make timely decisions as when you have to say, we can't carry on. There is directors and officers insurance, but that's only as good as the actions you've taken. So you do need to be careful. So I'm not trying to frighten any of you. You do have the liabilities as long as you act properly, carefully, take into consideration, then you are actually safeguarding your own position. But if you just bury your head in sands when there's a problem, you could have added problems to yourself. So next slide. We talked about, I've already mentioned budgets, about following budgets. And most of you, hopefully, are fully familiar with budgets and cash flows. I know previously where people have done a lot of budgeting, the last 12 months, cash flows have suddenly come to the fore. Cash is king. And in some cases, they've been weekly cash flows as people have had to follow the money. Just the definition, budget is an estimate of income and expenditure for the period. The cash flow actually follows the money when it's received and when due. And this is all about timing. You may create a wonderful budget which is going to show a surplus at the end of the year. But what happens if most of your income doesn't come in till the end of the year, or you'll have to complete the project before you receive the funding? You could find halfway through that year that the cash runs out. You can't pay the debts. You might be able to pay them in 6 months, but you can't pay them at that point in time. So technically you are insolvent and you shouldn't be incurring any more expenditure. Now, you might have an agreement with the suppliers that they know that's the position and they will wait for the funding. But what happens in 6 months if the funding doesn't come through and you've carried on making liabilities? So you do need to monitor the cash as much as looking at the budgets. One of the things you'll see quite a lot on the budgets is that, you know, an example of where the cash flow is different is in a budget, you might have your rent and an allocation of rent each month, but actually the rent is paid on a quarterly basis. So there's a disconnect between your budget and the rent. Another example, when you're looking at salaries, you pay your net salary in 1 month, but you'll pay the PAYE and the national insurance the following month and pensions. If you're VAT registered, you'll be paying that on a quarterly basis. So again, you need to keep the money back to be able to pay the VAT. So hopefully that gives you an idea where the budgets and cash flows are different. When I talk to people about budgets, particularly when I ask Charities, can they let me have a copy of their budget? Next slide. One of the comments is that, well, I can't complete a budget as I don't know when the donations, I'll receive them. I don't know how much I'll receive. And that is clue. The budgeting process is all about assumptions. You can start with some basic knowledge, some stuff that you will know. If you've got a rent to pay, you know there's a rent charge. If you've got core staff, you know there's a staff cost. There'll be other costs that you will know for sure that's what's got to go in. And there might be some income, you know for sure. You know you've got a grant for the next 3 years. You know its amount. They have agreed they're not going to pull it. You do need to be aware sometimes a grant could suddenly cease, but on the basis that you've got the grant agreed for 3 years. So you can put the key stuff in. Then you start making your assumptions. You've got light and heat. What's inflation rate going to be? So will that go up in the next 12 months? You need to document those assumptions because you need to go back later and challenge them and possibly flex them. So you've got your budget and you'll say it's assuming inflation was running at 2%. We've assumed minimum wage will go up by a certain amount. We've assumed pay rises will be 1%. So you've got all those assumptions down and that will create your budget. Now that budget, draft 1, will probably look horrendous because it's just your starting point. Then you've got to add in the bits that you know that you're going to make even bigger assumptions, write them. We will be doing donations. We know we've got regular donations of this amount. Track record has shown we've got donations of X. So let's put that into our budget. What we will be doing later is challenging those, but that's your starting point. There are some quite complicated tools you can set a budget up on. Most of them I see are on Excel. That is fine. But what I would remind you is to double check your calculations. I have seen it where, on both ways, where it's a budget looked absolutely horrendous because it was double counting. It was adding each month in twice. So by the time you get to month 12, you've got 12 of month 1 in there on the expenses side. So it was looking wrong. Or I've seen where they've missed lines out. And it'd be nothing major if you're missing out the wages line, which is your most crucial expenditure. And you're suddenly showing, oh, we've got a lovely surplus here. We haven't got to worry. And in fact, the calculation's wrong. So just as an aside, just do check your calculations. You will be different things you're going to do, different projects. So you might want to do your budgeting on a different project basis. Think about the things you're planning to do. In month 5, you might be wanting to put in a new member of staff, so include that in the budget. Having got your budget, you then need to look at the assumptions, and this is where we talk about flexing and challenging them. So what happens if my assumption that we're going to get £100,000 of donations is out and we only get 75% of those? What does that do to the bottom line? What happens if minimum wage goes up more than I expected? What's the knock-on effect of that? So you might land up with a very optimistic budget, a very pessimistic budget, and then the budget that you'll go with, but you've got either side of it. And it's important that the trustees do challenge that budget, do ask the questions. You're not criticising what somebody's done on the budget. You're just putting these different situations in, these different scenarios. What if? It also will help maybe think of things that you could do differently. So if someone challenges, well, why has this happened in wages? Why do we need this? And you could ask the question, well, actually, we probably don't need to recruit that person in month 5 because we've got someone that could cover that. So it's looking at those situations and challenging it. I've put on here about project contribution because I'm increasingly seeing that, because a lot of people get funded for a project, and what you would hope, where possible, not all, in all cases, that those projects contribute to your core costs. So when you're looking at your budget, if one of those projects is ceasing, can the other projects cover that loss of contribution to the core costs? So you need to look at those. And if you've got restricted projects, so their fund can only be used for that restricted, if you lose some projects that are actually contributing towards the core costs and you can't use that restricted funds for that, you could find yourself in problems. So your budgeting process is an overall budget, but you do need to look at the individual projects or sectors, however you're set up, to make sure that they are still contributing to those key costs. Next one. I mentioned earlier on about going concern assessment. Now, as trustees, you've got a set of financial statements and they are prepared on a going concern basis unless that's not appropriate. Now, the trustees will be signing those accounts off to say that they are continuing in operation for another 12 months. So if you take a 31st of March 2021 year end, you're signing them off in November 2021, you are stating that that will stay in operation until November 2022. So your budget might only go up to March 2022, but you're needing to assess up to November 2022. So you will probably need to relook at your budgeting process and to be pulling forward the budgeting for the following year. As auditors and independent examiners, we're also signing off that they're being prepared on a going concern basis. So particularly from an auditing point of view, we're going to have to ask more information. There's a new auditing standard on going concern, which requires, this came even before the pandemic that's been introduced, but they want us to do more work in this area. And our audit report specifically extends our wording on going concern. So the accounts have a going concern accounting policy, and a lot of you would have seen that was being adapted to say, I'll talk about the uncertainty of the COVID and what that impact is going to be. So a lot of your going concern policies have changed slightly in wording, and that similar sort of wording has appeared in some of the trustees' reports. But what we will be asking for, and your auditors, your independent analysts, as will be asking for more information. They will want the budgets, they will want the cash flow. As trustees, you will have to do an assessment of, is the charity a going concern? And we will be asking for that assessment. With my own clients, we've prepared a sort of small checklist that we're using for both charities and non-charities to actually start considering that assessment of going concern. I think the government is worried about something, these more going concerns being a shock, and you've seen it with the big ones when, for example, Carillion went, it was frontline newspaper, everybody saw it coming but nobody saw it coming. They want us to be considering these, and I think we'll talk about this later on. The strategy is what is important is your relationship with your beneficiaries, and there's nothing worse than a care home suddenly saying they're shutting down tomorrow and the impact that can have on the beneficiaries. So a lot of this is looking is safeguarding our beneficiaries that we're working for. And we're going to talk again the next bit about a runway, which is trying to foresee, and you can't always foresee the future, but to give some sort of pointers to look at how we're going forward. So that's my first part. I think we're going to be taking questions at the end. So what I will do is move over to managing a charity in crisis. But this sounds a bit dramatic, and some of it is talking about strategic planning. And a lot of, I know you've got your strategic plans last year, just went out the window, but it's coming back to getting those strategic plans back out of the drawer, re-looking at them, and just being aware of future issues. The future continues to be uncertain, and even this week with the next milestone openings being delayed 4 weeks, we have to manage crisis all the time. This is going to be increasingly, I don't think this will go away, and I think crisis will come up more regularly. So it's got to be at the forefront of your strategic planning. So what I'm going to do is look at some key areas to look at. We're basically going to be looking at leadership, operational, managing of finances, and scenario planning. And then underneath that is talking about communication, asking for help, and insolvency. Hopefully none of you find yourself in that position, but you've got to have that in the back of your mind. What happens? I'm also going to mention about mergers and collaboration. There's been an extensive amount of collaboration, and I think the key thing is I hope that continues going forward, because that can only make us stronger. And when you get yourself a crisis, it's much easier to deal with that if you're working together. Although I accept bigger isn't always better, there are some definite examples where coming together has made organisations stronger. And what I do suggest is maybe in the next week, you look at each of these top four areas to think how you're going to get those covered within your own organisation. So if we start with strong leadership. Next slide, please. One of the most important elements to help an organisation cope with a crisis is resilient leadership, whether it's just a single person or an entire trustee board. The messages need to be strong and the leaders must be visible. It's difficult when we're being encouraged to be socially distant, but we must all embrace technology as we're doing today, and therefore it's possible to ensure leaders are close to the team, even not if in the same building. Leaders will need to make difficult decisions, but to do this, they must have full access to all necessary information. This includes accurate financial information, and they need to must be flexible and consider different ways of doing things. An example of that is care homes, which were purchasing iPads to arrange video calls with loved ones rather than family visits. This has been a very stressful time for the teams at work and home. The dealing with well-being has become a very important part of a leader's role. But don't forget to look after yourselves as well, because you're all going through a significant amount of stress. We are faced with, next slide, a lot of operational challenges. We need to protect users as far as possible. They need to be identified and protected. You may be their main lifeline. You need to ensure your limited resources are refocused to ensure your critical services are continued at the expense of potentially less important projects. It's better to do a few things well than spread the risk across too many projects. You may need to consider what costs need to be reduced, and the strategic point of this exercise will be identifying those key activities which must be continued. Some income expenditure may temporarily be stopped and picked up again later, but it's most important, don't compromise on health and safety or safeguarding. One of the key points there is PPE does require increased cost. So we talk about a long runway. If an organisation makes a decision it can no longer continue, even with those vital services, it's important to ensure your beneficiaries are provided with a path to access alternative help where possible. Put them in contact with another organisation to help them. The message "we are shutting tomorrow" will have profound effects on users. Be open with the staff and volunteers on operational challenges. They may have some really good ideas to help an organisation adapt and deliver. Next slide. Ultimately, how the organisation will be able to cope with the operational challenges will depend on the strength of its finances. I've said this before and I'll keep repeating, it is crucial to have access to up-to-date and accurate financial information. You need to revisit your financial forecasts, revise income projections, and expect revised cost bases. As mentioned previously, careful not to strip back costs that unacceptable risk may appear within the organisation. Charity Commission talked about reserve policies. And this is one of the things that's helped a lot of charities coming into this sector is they've had reserves. And some will now need to start building them up again. Some of them with the funding have managed to secure them. But you should hold and monitor them carefully. In a crisis, you need to consider the level of cash you would need to close the organisation down, including redundancy payments. The reserve policy isn't just about a close down policy, it's a policy about what reserves you need to keep your charity sustainable and delivering the services it's delivering. But when things are going bad, you need to then consider that redundancy issue. You might want to consider carrying out a pest analysis A lot of charities have been doing that during COVID, and we can use that as sort of a backdrop of doing one. The political one is the current and potential new rules that the government's bringing in, the grants that are available. And economic is the impact on the economy, and what happens if with a recession and rising unemployment, how will that impact? On a social or situation, can organisations take advantage of a rising awareness of difficulties charities face and the desire for the public to help? It's quite interesting that the survey identified that people thought they were going to struggle to get volunteers. I think at the moment there is quite a big desire within the community to help charities, and I think we need to really work on that now before that desire dwindles off. And on technology, harnessing new technology to raise new funds. The thing we saw a lot more on some of the social media like Facebook is requests from charities for funding. Are the ways of using that sort of technology to increase our funding if the idea of bringing big social events is not going to be around for a bit longer? I'm going to now talk about scenario planning. Next slide, please. One way to approach a crisis is to consider scenario planning. It's very much about what ifs. What can we do? What can't we do? What we control, what we can't control. Are our assumptions realistic? Are they away with the fairies almost? Have we got this right? It's actually looking at the different scenarios. It's useful to help assess the uncertainties in your external environment. As I said, it involves making assumption of what the future is going to be and how your operating environment will change over time. It should stimulate new thinking and explore uncertainties. Some of the key questions when establishing a set of scenarios is, what is our objective? What do we want to achieve? It is sometimes just going back to asking that basic question. You know, what are we here to do? Who are we here to help? And what do we need to help? Start at the basics, start back at the bottom, and then actually look at what you're doing and what you can or can't achieve. What are we most uncertain about in the future? What obstacles are standing in our way? What information do we have which can help inform us, our thinking on these uncertainties? And how significantly might these uncertainties impact on our organisation? For each scenario you set up, you need to consider the impact on the beneficiaries, the staff and volunteers, your investments, your suppliers, funders, partners, and other key stakeholders. Keep it simple. Don't try to focus on too many uncertainties. That way madness lies. But you need to think about the alternatives and challenge each other. And that's where a good board with a good team work well together, where it's open challenging. People are allowed to say that silly thing because that might set up thinking elsewhere. So please make that scenario planning open. Next slide. So one scenario you might consider modelling is a potential merger. What would this look like for you? Who would you be your potential partners? It may not be a full merger, but instead just a formal collaboration, agreement to work more closely together and collaborate to deliver services. And we've seen a lot of collaboration and partnership over the last 12 months. But can I just say to you, merger is not failure. It may be an opportunity to deliver services more efficiently in the best interest of your beneficiaries. But merger doesn't work for everybody. I can say from example of myself where a merger has worked, where one of the charities I'm trustee of, I was chairman of a charity, worked with the other chairman, and we brought two charities together we were doing a similar thing in a similar area, and that's enabled us to grow and develop. I'm not saying it was easy, but looking back on it, it was the best thing we could do for our beneficiaries. That was what was key. Before I go on to a little bit more on mergers, we'll just talk next slide on collaborations and partnerships. The key to making a collaboration scenario work well is to make sure everyone knows who is doing what. What you don't want is users to fall down a gap as each party thinks the other is dealing with them. It's important you have an agreed terms of reference, good reporting, and a good structure. The collaboration may be as simple as sharing a back office support, spreading costs across 2 organisations rather than 1. Just as an aside, be careful on the structure because you may create some tax or VAT implications, so you may need to take advice on that. But what a collaboration and partnership is about is efficient delivery in the best interest of your beneficiaries. Next slide. Mergers. If you are thinking of pursuing a merger, then you do need to do due diligence. A lot of this you can do yourself, but you may need to take advice, and please take advice as necessary. You need to be looking at the financials. I think a lot of people do that, legals, but one of the key things is culture. The charity sector is very heavily involved in people. People need to work together well. And if you've got 2 charities where the culture is so totally different, can that ever come together? Is there a middle road you can meet? There's nothing worse, and there's nothing more expensive than a merger that then disintegrates, because the only losers will be the beneficiaries and the staff. So you do need to consider that at the beginning. If you've got property, you do need to get legal involved because you need to be able to transfer those properties, what might be a new organisation or going from one organisation to the other. So please seek help when you need it. The Charity Commission do provide a lot of help on their website, so I would recommend as a starting point looking at that. But what you remember is at the heart of any decision you make is the beneficiaries. Next slide. Unfortunately, you might have some scenario planning, which is worst case scenario. You need to consider that. It's not the outcome you want, but it might be useful to have one and then keep it in the bottom drawer to pull out any point of time you need it. We've talked about the runway is actually having some triggers that identify when things are getting bad. And some KPIs might be when the reserve policy, so your reserves are well below your reserve policy. Can that be resolved? Is that a trigger point to actually start looking at it? There is a point where there's no return. You need to be able to identify that. When you things are getting in a worst case scenario, and some of you would have been this in the last 12 months, is you will be doing regular weekly cash flows, which will link into your expenditure accounts and balance sheets. You need a full financial picture. You need to know what the minimum amount of money is in order to be able to pay off your liabilities and close down without needing an insolvency process. Hopefully you don't need to bring in a insolvency practitioner and you can manage the process yourself, but you need to know what that process looks like and how you track that performance. But as we said before, cash is key and that needs to be monitored very carefully. Next slide, please. I mentioned a couple of other points at the bottom of the first slide is talking about communication. And leaders of an organisation must be visible and must explain what's happening. They must explain the strategy to all their stakeholders. And once that strategy has been chosen, it must be followed and be clear what it is to your users, employees and donors. Ask them to helpfully implement your strategy successfully and communicate the reason behind a strategy will gain more support. Now, your stakeholders cover a wide range of people and they all need to be considered. You need to have regular meetings, and a lot of you would have been holding a lot more regular trustees meetings, which is one of the advantages of going on to Zoom or Teams, whatever source you're using, is those meetings are easier to hold on a more regular basis. Minutes should be taken. You need to probably go back and look at your minutes over the last 12 months and make sure those minutes are clear. There's clear action points that have been delegated to specific individuals, and all decisions should be clearly recorded. It's particularly if you are concerned about solvency, and this happens in commercial as well as the charities, is record at each meeting the reasons why it is right to carry on. Next slide. It is important to seek help. There are resources out there available. Apologies for spelling, it's NCVO, which is the National Council for Voluntary Organisations, Small Charities Coalition. There's a lot of guidance on their websites that can help. The Charity Commission also publishes a lot of guidance, and they can help. They will try and help. If you do have serious issues, you do need to consider a going concern problem that you might need to report that to the Charity Commission. And again, there's some details on this website about when you should make reports. There are legal and financial help out there. There are turnaround specialists. There are some specialists in the charity sector. There is a cost, but they will have experience in developing scenarios, planning and making difficult decisions to restructure. But it's no good pulling them into when it's too late, because their recommendation will be to appoint an insolvency practitioner. I hope this has given you some food for thought. We're going to open it up to questions now. I hope all you charities do continue to thrive through these difficult times. We've been here before. The charity sector is not an easy sector to be in, but it is the most valuable sector, I think, within society. Without us, I don't know where society would be. So it's important that we can still sustain ourselves and carry on helping. Thank you.
Thanks very much. Thanks very much, Amy. So we've got questions. Someone already has a question in the Q&A. Amy, can you access that and ask the question for us, please?
Sure. So this question has come in and it says, please could we be sent a copy of the presentation, which I think we said that we were going to do after anyway. So that was the question that we've got so far.
Okay. I would encourage you to put a question in the Q&A or even in the chat, and Amy will keep an eye on that, because it is an opportunity. Normally, this type of advice from Kreston Reeves you would be charged for. So please do ask the questions now when you're getting that advice for free. It would be unwise not to do it, especially if you are in a situation where you're really concerned that you are no longer a going concern and what you actually need to put in place. And there's another question, Amy, in the Q&A.
It says, do accepted charities such as Church of England, parish councils, etc., have to report going concern issues to the Charity Commission or C of E?
Well, if they're over £100,000, they're registered with the Charity Commission anyway. So yes, they would. But I think, yes, in all cases, they should be considering it. As a trustee, from a trust point of view, going concern is important. And I think you should report. I don't know what you have to report to the C of E. I can't comment on that, unfortunately.
Thanks very much, Susan. Please do ask some more questions. So as a comment, actually, Amy, can you just read that out?
Sure.
It's about parish councils, Amy, and then there's another question.
Yeah. Someone's just commented and said parish councils are not charities, but local government bodies funded out of precept. And that was just in relation to the last.
Yeah. So yeah.
We've got another question that's come in. It says, we have a contingency account under small reserve. What would you consider the minimum amount to hold in reserve in time?
I could do a whole session on that. There is, people used to do 3 months, 6 months. I think every charity is going to be different. If you're dealing with very vulnerable people, 3 months is probably not enough reserves, because if you are going to be in a situation where you have to close, you want to be, you'll need a longer period to deal with that. The same if you're dealing with dementia, making those changes overnight is too much for them. So 3 months maybe isn't enough time. However, for a small grant giving charity, that probably is enough. 3 months would be more than enough. Again, you've got to look at what your redundancy is, whether you've got redundancies, and that, again, if you've got long-standing employees, that could be more. So I'm sorry, I'm not going to give you a straight answer. And this is where each of the charities got to look at what they think their position is. And the reserve policy in your accounts tends to be what you think your reserves should be. And unfortunately, a lot of charities don't have that amount of money. But what you need to do is work out what you think it would be, what have you got, and part of the aim, hopefully over the next few years, is to build it up to that figure that it should be.
Thanks, Susan. What's the next question, Amy?
The next question is, we just had another question about the level of reserves, which you've just answered for us. Thank you. Does the 3-month expenditure total for reserves still apply in connection with the new accounting advice?
Now, again, it's never been 3 months. It's always been looking at your charity. Prime example, on my charity, we've looked at key redundancy, we've looked at project development, we've got in there liabilities that we've got coming up that we know. So if we've got a rent obligation, that's in there. So it's looking at lots of different factors as to what you need to include in that policy. I think 3 months for a small charity maybe is an easy starting point, but I think you've more got to look at the longer term.
Okay, we've just had another one coming in. At what level do we need a full audit?
If your income is over £1 million, or your assets are 3.2, gross assets are 3.29, I hope I've got that right, and income is 250, or if your deed says you have to have a statutory audit.
Thank you.
And some people are finding it's interesting with an independent examination. Again, you don't have to have one if your income is below 25,000, but if it goes over 25,000, you need an independent examination. Where charities have got additional grants this year, a lot of them have just tipped that 25. So all of a sudden they're finding they need independent examinations. I work with a lot of independent examiners, and being asked to do an independent examination two weeks before filing deadline doesn't work. You need to consider that early on and to appoint somebody.
Okay. And someone's just commented on the chat to say, by runway, do you mean by time?
Time.
Yes.
Yes.
Time. Okay. Excellent. I've just got another question come in. Does the going concern assessment require the charity to be able to continue for the rest of the current financial year, or for a longer period?
It is a longer period. You are looking from the date you're signing those accounts.
And just so is that 12? Sorry, Amy, is that 12 months, Susan? Then really, or the next full next financial year?
It's the 12 months, and that's the bit, because quite often you budget on a financial year, but people are going to start asking for the following financial year's budget, because that 12 months will fall in that following year.
Yeah.
Another question just come in. It says, when we talk about reserves policy, should we be looking at unrestricted reserves rather than restricted funds made by trusts and foundations?
Yeah, unrestricted reserves are not reserves available for the charity to spend as they wish. They're only able to spend on those particular specific projects or specific topic that the restrictions on. So
Susan was saying, that's actually what's important as a grant maker when we're looking at people's levels of reserves. It actually is more related to their unrestricted reserves, because restricted reserves, as Susan says, can't be used for anything else other than the purpose that they were gifted in the first place. So you really have to be careful about that. And actually, where a lot of organisations trip themselves up is their lack of understanding of how restricted their reserves actually are. That is something you do have to be really conscious of, especially if you're thinking about restructuring or using your reserves for something else. Because if they're restricted, you aren't actually allowed to do that.
And that's where some are falling foul, because they are spending, they've still got cash in the bank and they think everything's fine, but actually they've got 50,000 in cash in the bank, but 60,000 is restricted reserves. So actually they're using restricted reserves to fund unrestricted, which is illegal.
Yeah.
So you do, that's why I talked about on the budgets and actually separating between your restricted and your core work that you're doing.
Any other questions, Amy?
Yeah, another couple have just come in. With mergers and redundancies, the implications of statutory regulations, i.e. TUPE or TPE, are not often taken fully into account, and expert advice may be required.
I would agree with that. You do need to consider that, because when you do a merger, all the staff go over with their existing terms and conditions. So you do need to do work. And with a merger, there's a lot more you can talk about that, but you do have to have consultation periods with the staff. You can't just tell them they're going. That's when you're looking at the two charities, because one could have slightly better benefits than the other. Although your mum might have better wages than the others. There's a lot of things you have to consider. What you can't do is tell a member of staff you're going to work for this charity and that's what your salary is going to be. You can't just change it. So a lot more consideration. And the other thing to watch out is also pensions, because if you're merging with a charity that's got a final pension salary, you could find yourselves in a lot of problems.
Next question. I am new to working in a charity. What's the timeline for reporting to the Charity Commission in terms of filing deadline?
10 months after your year end.
And actually, Susan, what's really important about that is if you don't comply with that, that is a black mark against your name on Charity Commission, and any funder that you apply to for funding, the basic due diligence they will do is to check and see if your reporting of your accounts are late, and if they are, you're unlikely to get funding. So actually, a basic thing that you do, if you are an organisation that is generating enough annual income, you must submit your accounts to Charity Commission, because it is recorded on your record if you don't. And as Susan said, it's 10 months after the end of your financial year, you must do it. So just be really careful about that.
And if your company limited by guarantee, they need to be at Companies House within 9 months. And there was talk about reducing that, but nothing's come at the moment. So it is still 9 months on that one.
Got quite a few more coming in. On what basis could a charity look at reserves of less than 3 months?
No staff, no obligations. You could be a grant giving. So if you haven't got income, you don't give grants out. There are a lot of very small charities out there that just get maybe some income from a portfolio and then give that out. But it's looking, it's going to be charities that don't have a lot of liabilities.
Susan, the thing for us is that a lot of the organisations that apply to us are very small, so annual income under £10,000. And for a lot of organisations who will be delivering activities, they potentially can mothball those activities, so they can stop without actually having any liability to pay salaries. I think that's the key thing. If you have salaried staff and you have liabilities around those charities, including pensions, contributions, or any other obligations that you have to those members of staff, that's where dipping below that 3 months is really dangerous for you, because that's when you get into the insolvency issues. So unless you're very small, or you don't have a lot of paid staff and you don't have a lot of liability, really you have to be operating at that minimum 3 month reserve level, whatever value that actually is for your organisation. A couple of questions. We've got 5 minutes left.
Yeah. Would you recommend holding 2 bank accounts, one for restricted and one for unrestricted funds?
If that helps you, it depends, because you don't want to do is have additional charges from the bank if you've got 2 bank funds. But if that helps you control that, then that's, it would be a good way forward. But if you've got good financial accounting, you might be able to do that without holding 2. But I think it might be a good idea if you think that's a way of you can keep better control. I'm all for looking for things to reduce risk.
And Susan, we do too. We have separate bank accounts for our restricted money and our unrestricted money. So for all of our operating costs. So we do that. That's a practice for Kent Community Foundation. And final question, Amy, and then there's a comment in the chat as well. If you can do both of those, and then we'll wrap up.
Sure. So we've got a question here. It says, although reserves policy pot needs to be from unrestricted funds, can we factor in amounts we know we are receiving under contracts, which will be restricted funds when calculating the level of unrestricted reserves pots for reserve policy?
Yeah, well, it gets more complicated. Yes, you can, up to a point you can, because some of your staff will be working on those restricted projects, and those restricted projects have possibly got a built-in closure cost anyway. So you know those staff, if that contract ceases, you will not continue employing them anyway. So when you're looking at your costs, you might be able to exclude them when you're looking at that reserve policy.
Okay, thanks, Susan. And there's one other comment, Amy, if you can read that out in the chat, and then we'll wrap up.
In the chat we've got, is there a particular time?
Oh, sorry, it's the very last comment from Eleanor. We are a small charity.
Okay, yeah. We're a small charity at a crucial point where we are poised to grow quite substantially, having done well for the past 2 years, but funding is suddenly not coming in as before. We rely mainly on grants. We really need an operational manager, but we haven't got the income to hire one. At the moment, we have enough to pay our staff until the end of this year. Any ideas or advice?
Yeah, this is where looking for some trustees and some volunteers that will come along. I think I don't think I can give you a straight answer at the moment. I think it's, yeah, perhaps if you want to give me through Amy a telephone number, I can give you a quick call.
Yeah, that's been quite common, Susan, that kind of general, done really well, income has dropped off, and that's actually about diversifying your income. So you have to have you don't have a fundraising strategy. I think that's the mistake that a lot of organizations make. You have to have a finance strategy. You have to think about where you're going to generate income from, because it's not always going to be from grant making. It's a bit like having all your eggs in the one basket. It's like having one major contract and that finishes, and you have no contingency plan. And that's where Susan was talking about contingency planning. You need to think about how you diversify your income streams. I mean, that's one of the key things for any organisation to do. Try not to, if you possibly can, have all of your eggs in that one basket, because that's a dangerous strategy to have.
Yeah, it happened when the lottery was first on board. A lot of people got contracts from the lottery for 3 years. What they should have done as soon as they got the lottery funding, start looking for what happens at the end of year 3. What they didn't do, they waited to year 3, hoping maybe they'd get more lottery. So yeah, it's an easy trap for everybody to fall into. It's yeah, and particularly when there's a need for you and you grow because that need is getting greater, and then the funding comes back. But again, it's probably going back to some of the stuff I said in this scenario. Go back to what is your core thing that you need to do, and where you need to, and what can you deliver on a smaller level of income. And also going to the collaboration, some of that, working with other charities doing similar things. Is there some stuff you can work with them together? Can you go into partnership with somebody? Is the charity doing something similar you can merge with it? They don't have to be doing the same, but maybe an add-on that you could actually work with your expertise that you've built up in the 2 years could enhance another charity and help move that forward, and you all come together.
Thanks, Susan. Susan, thank you again. That was a really great presentation. We will share the presentation, as we said there. So one good piece of news is that we will be launching again, probably after the summer, a new resilience fund, which is exactly for you applying for funding to help you think these things through. So that should be live from September time. And more information will be available through Kent Community Foundation. If you aren't already on our funding alert, because all of the information will be in there, then do go onto our website and sign up to our funding alert, and that will give you all of the information about the help available and funding that we can provide to you, so that you can employ some people to give you some expert advice. So once again, thank you very much, everyone, for taking the time this morning. I hope you found it useful. Do come back to Amy if you have any questions, and we will filter them through to Susan. So again, Susan, thanks very much.
Thank you.
Thanks, Amy, very much for organising and fielding all the questions. I'm sorry if we didn't get to yours today. Appreciate that there is lots of questions will actually come up and you'll think about afterwards. But the presentation is being recorded, and we will wing that over to you so that you have that. Thanks very much, everyone, and have a great rest of the day.